What's up everyone, it's Caddy with MoneyVest. So today we're going to be talking about Tesla. This has been a long overdue video that you guys have been waiting for. So thank you so much for your patience. Tesla, of course, has been a little bit back and forth with regards to the price action. It's been higher, lower, all over the place. More recently, we did see a reasonable rally from lows of 140 back up to as much as 198, so almost $200. So there was a 40% jump in Tesla, but then of course recently, yesterday, dropped over 5.5% again as it continues to struggle at that technical resistance at $200 a share. I did pick up some shares in the 140s, and I sold some calls in the 225 strikes, which are now up over 72%. So I'm going to break down the earnings. I haven't broken them down yet, and we'll also talk a little bit about the Tesla layoffs, the approval in China, and a lot of other headwinds and potential challenges for Tesla moving forward. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. Please make sure that you subscribe to the channel if you haven't already. And the links to our Discord and Patreon is also going to be down below if you're interested in joining us and of course getting access to all the members only videos. This is the most recent one that I've posted. A lot of members seem to love this entire 30 stock shopping list and of course all the buy targets. So there is a 16% annual discount that expires literally tonight. So today is the last day if you want to take advantage of that. And not only that, you will have access to all the trade alerts, including my options trade that I sold yesterday. So in just one day, the Tesla covered calls are now up over 72%. So I will be looking to close these options out very soon. The moment it crosses over 85, close to 90%, we'll be looking to take some profits off the table, up over $755 in just less than 24 hours after selling these two options. So again, link's going to be down below. Quite literally, one trade can pay up to 4 years worth of membership on MoneyVest. So link's going to be down below for you to join, and we'd love to have you on board. So first things first, let's talk a little bit about, this was from TrendSpider, and I could not help myself but laugh, and how the counter at Tesla at $140 only has one person at the counter, and Tesla at $200 has so many people interested in the stock. And that's how psychology works. If you see something going up, we buy it. If you see something going down, we run away from it. And we really need to kind of flip that psychology when it comes to investing, because really the crowd should be at lower prices, because the lower the price you pay, the higher your future returns will be. But unfortunately, in the markets, when prices are going higher, people get more and more interested on that stock here. So when it comes to the summary of the numbers, first, very quickly breaking down. So earnings reported at 45 cents per share, missing EPS expectations. Revenue 21.3 billion, missing expectations, which of course we assumed and we understood that was going to be the case. But of course, the stock price still indeed rallied quite aggressively on the back of those numbers here. So if you take a look at profitability, so we're looking at $1.2 billion of GAAP operating income in the first quarter. And then of course, net income coming in at $1.1 billion and non-GAAP net income coming in at $1.5 billion. And as Tesla essentially mentioned, that we experienced numerous challenges in Q1, from the Red Sea conflict and the arson attack at Gigafactory Berlin to gradual ramp of the updated Model 3. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. So we understood that Tesla is going to be facing a lot of challenges in 2024 because of the fact that interest rates are higher. So it's going to be more difficult for people to finance electric vehicles or just vehicles in general. And of course, not to mention that competition is also increasing, right? So Tesla is also dealing with a lot of other manufacturers for EVs, which is also causing Tesla to be somewhat resistant in terms of its deliveries, right? So they have to lower prices, they have to compete on a pricing basis with a lot of these other manufacturers. So that's what's causing margins to also come down. So margins been a very, very important issue that we've been dealing with when it comes to Tesla. So if you come take a look at the actual numbers, so we do have, of course, total automotive revenues of $17.3 billion in the first quarter of 2024, which is obviously the lowest number we've seen in the last 4 or 6 quarters, not to mention 13% decline on a year-over-year basis. And then, of course, total revenue coming in at $21.3 billion, down 9% year-over-year. GAAP gross margin 17.4%. I would say that it was actually pretty stable if you look at the last 3 years worth of numbers here. So 17.9, 17.6, 17.4. So it's been fairly stable here. And then, of course, if you take a look at the net income, so which is the bottom line, that was a huge decline, right? So we're looking at around 40% lower. So net income was about 48 to 55% lower here from the company. And then not to mention the operating margin, right? So operating margin was the biggest problem here, down almost 6%. So coming in at 5.5% here for Tesla compared to 11.4% in Q1 of 2023. Not to mention, even on a quarter-over-quarter basis, we did see a significant decline for the company. So if you take a look at the earnings per share, so 34 cents, 45 cents per share, so we're looking at a 53 to 47% decline on a year-over-year basis. So really what I mentioned was in my previous video that this was going to be a kitchen sink quarter for Tesla where expectations were not so high. We learned about the delivery numbers, which were also below expectations significantly. In fact, Tesla only really delivered 433,000 vehicles produced and 386,000 deliveries, which was down 9% on a year-over-year basis. And we already knew going into these earnings that the numbers were not going to be super great because of all the challenges that Tesla is facing. But the profitability is still there. I mean, the company is still generating profits. Of course, not as much profits as compared to what we are used to seeing because of the 40 to 50% decline on a year-over-year basis, but it is still generating profitability. Now, the biggest concern that I had were two things. I'm going to mention, and I'm going to be very honest, even though Tesla is one of my biggest positions, I'm going to be very honest. There's two big concerns that I have with Tesla. Operating margins being number one. So 5.5%, that is a significant decline. And that's probably one of the reasons why Elon Musk is now focusing on cutting its employees, right? So they're doing a lot of layoffs. They, in fact, completely got rid of the entire supercharging network team. And then, of course, if you take a look at the free cash flows, negative, right? Negative for the first time in a very long time. So $2.5 billion in negative free cash flow, down 674% on a year-over-year basis. So these are definitely some eye-opening numbers, and I'm not going to be sitting here sugarcoating a lot of these numbers because they are not great, unfortunately. So we are seeing declines on profitability, we're seeing declines on earnings, we're seeing declines on cash flows, we're seeing declines on deliveries, price cuts. I mean, this is, again, a time which is going to be very, very difficult for Tesla in 2024. If you take a look at reduced vehicle average selling price year over year, including unfavorable impact of mix, foreign exchange impact, decline in vehicle deliveries, partially due to Model 3 update in Fremont factory in Giga Berlin, disruptions, negative foreign exchange impact, growth in other parts of the business, higher FSD, revenue recognition, and then profitability, reduced vehicle average selling price, increase in operating expenses, partly driven by AI, cell advancements, and other R&D projects, cost of Cybertruck production ramp, decline in vehicle deliveries, lower cost per vehicle, including raw materials and cost, and gross profit growth in energy generation, higher FSD revenue recognition. So really, I mean, cash on cash, they're sitting on about 26.9 billion, decrease of 2.2 billion because of the negative free cash flows. And if you come take a look at their balance sheet, so all the way, I thought I had their balance sheet. So bottom line is they do still have more cash than debt on the balance sheet. So we have sufficient liquidity to fund our production ramp, long-term capacity expansion plans, and other expenses. And our company is currently between two major growth waves. That's what they have mentioned. And first one began with the global expansion of the Model 3 and Y. And believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation, so FSD and artificial intelligence. And when it comes to profitability, while we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied by acceleration of AI, software, and fleet-based profits as well. And again, capacity is increasing significantly to well over 2.5 to 3 million vehicle productions here for the company. And these are some of the next generation vehicles with Tesla Semi, Roadster, and of course the next gen platform vehicle, and something that's going to be, again, a lot more reasonable, under $25,000 to $20,000 as well. So in terms of outlook, in terms of product, this update may result in achieving less cost reduction than previously expected, but it enables us to prudently grow our vehicle volumes in more capex efficient manner. And this would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines as well. So this right here was one of the reasons why Tesla actually rallied the way it did. So Musk wins China backing for Tesla's driver assistance program. So Elon Musk's quick visit to China paid immediate dividends. Of course, the stock price was higher the day before. And they basically mentioned Tesla did manage to clear two of the most important hurdles, reaching and mapping and navigation deal with Chinese tech giant Baidu, and meeting requirements for how it handles data security and privacy issues as well. Again, this is the approval from the government officials to deploy driver assistance systems in the world's biggest auto market as well. and they've also planned for more job cuts as they are laying off their entire supercharging network team. And one of the laid off employees mentioned, so in an email to senior staff, Tesla CEO told them to cut more employees who, quote unquote, don't obviously pass the excellent, necessary, and trustworthy test. So basically, these are the big qualities that he's looking for in his employees. They're excellent at what they do, they're essential or necessary to operations, and also they're trustworthy. If they don't meet this criteria, they're gone, apparently. And Will Jameson, one of the affected employees, said that he has let our entire charging organization go. And what this means for the charging network and all the exciting work we were doing across the industry, I don't yet know. What a wild ride it has been. However, Tesla will continue to build out some of the new charging superchargers locations where critical and finish those currently under construction as well. So the bottom line is, look, Tesla dealing with a lot of headwinds in 2024. Higher interest rates, competition, expenses, price cuts, margin compression are just some of the things, to name a few. Delays with respect to newer models coming online, delays with respect to FSD, autonomous driving, a lot of challenges, right? In my opinion, Tesla is still not a technology company, right? Many people have argued with me for a very long time that Tesla is a technology company. For me, it's an electric vehicle company first, and technology comes second. Right now, primarily the majority of the revenues are coming from EV sales, and until it stays that way, my thesis is that it's an EV company. I'm investing in Tesla as an electric vehicle company. If it becomes a technology company, if autonomous driving actually comes into fruition 100%, FSD's online, supercharging networks, energy storage, autonomous driving, and AI, everything that Tesla's working on, if that comes to execution, if it's fruition, then that would be the cherry on top. But that's not my main thesis. I want to be very clear that if Tesla's able to ramp up production and deliveries from, let's say, 2 million vehicles in 2024 to 5, 7, 8, 10 million vehicles over the next 7 to 10 years, I'm happy as an investor because I know that eventually Tesla's revenue is going to grow. It's going to go from 100 billion to a couple hundred billion to half a trillion to potentially even higher. And that's going to increase profitability because margins are going to get better from here. Yes, Tesla's struggling right now with margins coming down because of price cuts, but eventually every new technology, prices eventually come down as technology gets better and more efficient. So, and of course, Elon Musk also understands that operating expenses are high right now for Tesla, which is exactly why he's cutting some of the jobs and functions of different departments to help with operating expenses, because operating expenses are incredibly high. If you take a look, they actually increased 37% on a year-over-year basis, if I'm not mistaken. So total operating expenses over here, you'll notice if you come sideways, $2.5 billion up, 37% year-over-year. Which obviously resulted in a 6 percentage point drop in bottom line operating income, right? Which is pretty obvious if you are spending a lot on operating expenses and you don't really need that much. So this is where the cuts are going to happen. And I do believe that with these cuts, with price cuts also stabilizing a little bit, with interest rates potentially, again, that's not something that I'll be banking on, but if interest rates come down, that's only going to be helping Tesla over the next couple of quarters. This margin, 5.5%, can start moving back higher. But it's coming down to some pretty deadly territory here because 5.5% operating margin is very close to zero. So the last thing I would want to see is an operating loss for Tesla. So yes, I do believe that 5.5% margins have kind of bottomed out here. And moving forward, we can kind of stabilize at these levels and start accelerating back up. But of course, only time will tell that because the last 4 or 5 quarters have been absolutely a downtrend on margins across the board from 11.5% to 9.6 to 7.6 to now 5.5. So it has just been a nightmare for Tesla in terms of margins. Now coming over to technicals, I mean, this is the entire rally for Tesla that we witnessed from 140s back up to 198, so 40% rally. But of course, selling off on the day, 5.5%. So this is the overall downtrending channel, and then even steeper downtrending channel, then of course breaking out once again. But I knew there was going to be a resistance in the 200s, which is exactly why I sold my calls. So this right here, massive area of supply and resistance for Tesla, and a breakout beyond this, the next target is going to be in the 240s all the way up to in the 300s for Tesla. So we still have a long way to go. Very strong support at 177 down to as low as 145. for Tesla moving forward. So those right there are going to be some levels to keep in mind. Hope you all enjoyed this video. Let me know your thoughts down in the comment section below. Nothing changes really from a long-term perspective. It's just a wait and see approach on how Tesla executes moving forward, how operating margins do, what is going to be that Tesla vehicle delivery and all that stuff. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like, and of course, don't forget to subscribe to the channel. Again, tonight's the last night if you want to take advantage of that 16% annual discount and be a part of our MoneyVest community and get access to all the trade alerts and all the members-only private videos as well. So always happy investing, and I'll see you all in the next video.